So we are all aware of the fact that what is lending. Okay, so basically that's what peer-to-peer lending is. Individuals lending money to individuals for small businesses or any person. So this is a personal loan that is being given out. So what has kick-started this? Why are we talking about this today? Why is it that the economic times has got us here today? So first of all, let's go back a little bit and understand the journey of our economy. So first of all, let's go to the internet age, where it was just plain simple Gmail. You'd send one email to someone, messenger, sending information. So that was first generation internet. Second generation internet basically was where you started sharing photographs, you started sharing videos, you started sharing much more than just information. So that was second generation internet. Then we came on to a much larger. So today we are in the third generation internet, where we are sharing not just information but also our cars. So a guy who has got a car gets a medallion or gets a taxi number and he puts his car on as an Uber. So basically there's a business model there. You have a house, spare room in the house, you want to let it out. That's what gave rise to Airbnb. You have extra money, you lend it out to people on online platform, which gave rise to Faircent. So basically we are today in a shared economy. Peer-to-peer lending removes the middleman from this process. So usually whose business was lending? It was the bank's business for lending. So basically you give money to the bank then leverages that money and lends the money out to people, gives you back the money. Okay, in the middle there is a margin that it keeps. So basically what we're doing is we are connecting the lender directly to the borrower, which is what helps you make that additional interest rate. Going forward, we'll see how it's done. So basically the peer-to-peer lending is very new to India. Very important, NAC mandates. So all the EMIs are done through NAC mandates. So there are 3 checks that have been taken from each and every customer, each and every borrower, and then he goes live. Now, once all this data has been captured, okay, it is shown to you in a palatable format. It is shown to you in a format that is more transparent. So you can see his CIBIL. So each and every borrower, you can see his CIBIL, where he stays, what's his occupancy, how long has he been working there, his FOIA, okay, underwriting report. All this information is available, and then you make an informed decision of giving him money. Okay, all our borrowers are risk priced between 9.99% going all the way up to 36%. So we have 6 baskets where you can pick and choose borrowers into these risk buckets. 100% funding initiates every loan. So every time you give a loan to a person, there is a loan agreement that gets formed. So say you've given, a guy is looking for say 10,000 rupees or 25,000 rupees. You end up giving him only 1,000 rupees. Okay, so there is a loan agreement for that. So every time you give a loan, there is a formal loan contract that gets formed, and you can view this loan contract online. Now, this is one of the most revolutionary things that RBI has come up with, and has received a lot of accolades as well for this. Basically, in China, what has happened is a lot of P2P companies, you must have heard about this or not, but a lot of P2P companies have gone bust. They've taken money, ran away, not able to service the debt. Okay, what RBI has done, obviously after doing the research, what they've seen is that every time a lender lends money, okay, there is something called as a escrow account. Okay, so every time if a lender gives money, the money gets parked in a escrow account. When borrower gets money, there's a escrow account. Both these escrow accounts are connected to each other, and there is a third party which manages as the IDBI trustees. So at any given point, Faircent does not have control into this. So what is Faircent doing at this point of time? Just acting as an aggregator between lenders and the borrowers. So basically giving you a much more robust system in place. So what I'm trying to say is tomorrow, say for instance, if Faircent is not there in the picture and you have a year, 2 year, 3 year contract into in the running. So the question is, what if Faircent goes bust? There will be a separate company who can service those contracts because it's regulated by the Reserve Bank of India. So rules and regulations remain all the same. So your money is protected. Okay. Each and every borrower has his insurance. So borrower insurance is so for life, anything happens to it, the entire principal is taken care of. If the borrower goes permanent disabled, the principal is taken care of. So your money is again safeguarded by the insurance policy. Okay. See the end, and obviously this is for collection process. The entire collections process is in-house for Faircent. We have a 250 member team in Gurgaon who does collections, legal and recovery all for you. And you can see the status of each and every borrower. So any borrower who's not paying up, what is happening on that borrower. You can see everything online. From the comfort of your house, you can see everything. So if there is collections, the girl is calling, the call center agent is calling, she'll put very descriptive notes over there. If the recovery is happening, if the recovery is not happening, what letters have been sent to the customer. All this thing can be viewed at the with the click of a button. Okay. Now these are system. Now at system levels, what risk mitigations do we have? Now one of the most best ways to use this platform, or one of the best ways to basically invest onto this platform and to mitigate your risk is fractionalize your loan. So when you're giving out a loan on peer-to-peer lending, so let's take an example, a lakh of rupees. Okay, you want to invest a lakh of rupees on peer-to-peer lending. You can give it to one borrower only 500 bucks. So as small as 500 bucks. So now for a lakh of rupees, you have about 1,000 to 100 to 200 borrowers. So you're fractionalizing the loan. So you're not giving your lakh of rupees. A guy is asking for 10,000 bucks. You gave him 10,000 bucks. You only have 10 borrowers. No, you can go as small as 500 bucks. Distribution. Our borrowers are spread across 350 cities. So as I said, all the risk parameters taken in consideration. I have borrowers in 350 cities. All verified, all checked, physically verified, gone, checked. All the things that we spoke about, everything is done. You have a plethora of loan products to choose from. People who are looking for business loans, salaried, students, LOC, your micro, daily and weekend loans as well. So there is something called the weekend loan, there's something called the daily loan as well. So it's a fantastic product when we speak in front of a liquid fund. So I want to put money for say 30 days, or 90 days. My minimum product starts from 90 days to 36 months. So you can pick and choose how you want to invest your lakh of rupees. You want to put a little bit to people for business, a little bit for salaried, students, micro, daily loans, weekend loans. You can pick and choose the way you want. Okay. So what this means is you are diversifying your investment into larger groups. So let's take an example. So say for instance, you have invested say a lakh of rupees onto my platform, and every month, so you're expecting say anywhere in the range of 14-15% return. That means your monthly EMI would come around. So every 15th you end up getting about some 8,000 to 9,000 rupees in your escrow account. Okay. Then you decide you want to take it back into your account, or you want to buy more borrowers. You want to buy more borrowers of that. Completely decision is left up to you. There is also something called as auto invest. When you're getting that 8,000 rupees on a monthly basis, if you reinvest that money back into the account, if you're reinvesting that money back onto the platform, or you decide to take 50% out of it and 50% you want to reinvest back into the account, you end up making it's not coming proper. That figure that you're looking at is 5%. So 50%, if you put 5% is what you end up making, and 25%, so you put 100% money, you end up making 10% extra. So by taking a 15% risk, so you don't take for a 25% risk, you need not invest in a guy who's looking for 25%. Just by taking the risk of 15% and by reinvesting the money. So you put 1 lakh rupees, you've got 100 borrowers. Those 100 borrowers, every month you get EMI. You buy more borrowers. So with 8 to 9,000 rupees, you buy additional borrowers every month. So you get, say, you get what? 8 borrowers, 1,000 rupees per borrower, fair enough. So you keep adding 8 borrowers to your portfolio. So at the end of the year, you have a compounding interest of 15% interest, you end up making 25% interest. From dashboard and analytics perspective, we give you a lot of data. We are obsessed with data. We give you too much analytics. We give you platform-based analytics. We give you comparative data. You can check, research how I can better my NAR, my ROI. So in this parlance, we talk about NAR, that is net asset return. How can I increase it? At an institutional level, obviously, we keep sending Dunning letters. So the entire NPA game is a 90-day process. So within 90 days, you'll come to know if the account is NPA or no. So on the 90th day, the guy gets a legal notice from the court itself. So first a legal notice, second legal notice, third legal notice, a summon goes to him, non-bailable arrest warrant that he has to make the payment. These are in terms for the naughty borrowers. Going forward, so what can you expect at the end of the day from peer-to-peer lending? Anywhere between 14 to 18% return, risk-adjusted return. Now, there is an offer going on today. Try this P2P lending on FairSend platform, and you end up making, and we're giving about a 50% discount today itself. So, and I'm available. I'll be around here. If you have any questions, please feel free to ask. Thank you so much.